What's up everybody, welcome back to AZ Trading. This will be a new style of video, so I'll be very grateful if you let me know in the comments if you found it informative and if you enjoyed it. And I'll just give you a sneak peek of what's to come, but I decided to record my screen for the entire duration of a trade, so you'll see the management and I'll tell you my thoughts as I time-lapse through the trade. But as you already know, yesterday, the 12th of January, was a very high impact news day, which the CPI numbers were released. And during these highly volatile times, if you don't know what you're doing and you're not meticulous with your risk management, you can get punished very, very quickly and very heavily. However, during these highly volatile moments, you can see that there could be lots and lots of opportunities. However, the trade that I took on this day was before the CPI numbers were even released. But before we get into that time lapse of my trade management, I'll just turn on the executions and the labels. I'll just go through this trade very briefly because I'll talk about it more during the time lapse. And you already know the pattern we used is the RMR pattern. So first we look for a raid below these relative equal lows. Then we look for a short-term market structure shift, so price is now bullish after breaking this high. And finally, to enter, we wait for a retracement into our return area, and in this case I used a 1 minute gap, and this is where I placed my entry, and my objectives were this 1 minute partial area as well as those equal highs above. If you're wondering what those additional orders are over here, I accidentally clicked the S button on TradingView, which got me out of the trade, but you'll see that happen in that trade management video. Alright, and one last thing before we go into that time lapse. I just want to say on my YouTube channel, we just passed 5,000 subscribers. So I just want to thank you all for being part of the channel, whether you're viewing, commenting, or part of the community Discord. You've made me very happy, and I put out a little poll over here asking what you'd like for a little reward. And it seems you guys have wanted me to create an in-depth trading course full of exercises. I'm not gonna lie, I was kind of afraid you guys would choose this one because knowing me, making a course that I'm proud of and is different from the generic ones is actually gonna take quite a while. But since you all voted for it, I'll start making it, so it'll be a work in progress. Alright, so welcome to the time lapse. I've just placed my entry order. After your entry, you gotta place your stop loss immediately. Here I'm just measuring the stop loss, but this should be all done before you even enter into the trade. So whatever your equity, your risk percentage, stop loss size, market that you're trading, using my own risk calculator over here. If you have an EA that makes it easier, even better. But the point is you must find out what position size to use so you're not over leveraging or even under leveraging. Here I'm just mentioning that this is a quick bullish RMR trade pattern that I'm looking at ahead of the CPI, which is at 8:30, and my entry is currently in the London session or the late London Open. I'm just outlining the RMR at the moment where we had that raid, but also it reached a 1 minute gap on the left hand side, so it was a good raid. And I just mark out the market shift and that return area. This is where I mark out that objective, and as soon as I typed the letter S, it just got me out of the trade. So I just placed the entry immediately after, but for the sake of the study, just imagine that my entry was at that return area. Alright, I'm just going to fast forward a bit until something interesting happens. Over here, I'm just showing you guys me applying relative strength on the Nasdaq, retraced to around 60-70%, S&P retraced around 80%, and finally on the Dow is also at around 80-90%. So NAS was the strongest at that time of the entry, so I longed the NAS. However, if you go back onto your charts, you can see that the Dow and the S&P actually had a stronger bullish move, stronger than the NAS. These are just one of those moments where choose which one was strongest at the time during a bullish trade. Relative strengths change during that trade, then it just changes. It is what it is. Know when it's going to change. I haven't done that much backtesting on when it changes. However, I have noticed that sticking with the strongest during the entry of a long or the weakest during the entry of a short, market will more likely continue to be the strongest or weakest rather than just swapping or switching immediately. Over here, I'm just labeling a 1 minute gap where you could take a potential partial off. And the above gap, this one over here, this is where I've planned to take a partial off. And at the final objective at those equal highs above, I'm just going to write you could, or I could leave 10% there to run after taking the majority off. However, I've decided to off my entire position when price reaches that area. Jesus Christ, I'm going to be stuttering. Oh my god, I'm going to be stuttering so much in this video because I have to record raw. I can't. Now I'm just playing around with the little buy function, having a look what the risk to reward ratio is. It's around 1 to 4.45 or 1 to 5. But obviously, once you take a partial, then your risk to reward ratio will go down. So it will be around 1 to 3 or 1 to 4. Still a very good ratio in my eyes. Honestly, during trades, I never really look at price action so in depth unless there's a lot of conflicting objectives being formed, and not to overanalyze whatever price is doing. Most of the analysis should be done before the entry. Any over-analysis during your trade can lead to emotional decisions. Just written that this is a new style of video. I might voice over this later. I had no idea how difficult this would be. So it's because I've never done this before, so please bear with me. Here I'm writing a little note saying to set limit orders for your stop loss and to set limits or alarms for partial locations, objectives. The note I've written is the less you look at the charts, the less chance you'll make an emotional decision, and the less chance you'll find something logical that you'll justify as logic to make an emotional decision. What I mean by that is, we separate logical decisions and emotional decisions. Well, you'll notice that your emotions will try lots of different things to get what they want. They'll even try to find logic and reasoning to find ways to get what they want. If it's an emotional decision, your emotions will find logic just to get you to act on them. Over here, I'm just writing that I prefer to look at the charts every now and then, so that way I can see if opposing short-term liquidity is being generated. For example, if equal lows are being generated short-term, like what I'm drawing right now, then it might not be the best sign to stay in a long, so I might reduce my risk, or I might cut my losses by reducing my stop loss. And on the diagram, I'm just showing that there's a lot of liquidity if there's equal lows there, and price would more likely just dump straight through. I'm just setting a limit order at the partial at the 1 minute gap above, a 30% partial. If I was staring at the charts right now, how do you think I'd feel? Price made a short-term bearish retracement or a bearish market structure shift. Is price just going to completely dump and stop me out? But the point I'm trying to make is, the more you stare at the chart, more opportunity for emotional decisions to come into the mix. Just glancing at my chart every now and then to see if equal lows are being generated, but no, they're not, so who cares? Price is just retracing, and that intermediate short-term low has not been broken. Price is now pumped to that 1 minute gap over there, so this could be a potential partial location. However, I've decided not to take a partial at this area. And now that I've decided that we've reached our first partial opportunity, I've decided to reduce my stop loss to break even. Since today is CPI day, I'm just respecting the risk that this day has. So if my trade gets stopped out because I've given price less room to breathe, so be it, I've accepted that risk. Oh no, price is dumping, I'm going to get stopped. Just kidding, it's going into a gap on the left. Overlapped with a bullish order block, so we want to see some bullish reactions right now. You You can see that price has retraced multiple times during this slightly accumulation section of price. All of these retracements could be multiple opportunities to enter. This recording took up so much room on my computer, but now I'm just trying to find a nice viewing perspective to watch the trade time lapse. Price has almost reached our partial location. Just heard my alarm from my MT4, MT5 broker go off. That's where I've taken off my partial, and so that's what I've mirrored on this TradingView trade. So we've taken off 30% and now we're just letting the rest of the position run to those equal highs. Price is very close to reaching those highs. I'm just writing a message saying you might feel like taking off your position, but what have we learned? The more we stay away, setting and forgetting, the less chance for emotional input. Also, equal highs are being generated at the moment, so buy side liquidity is being generated. So there really is no point getting out early since it's very likely for that area to be raided. Oh, and you just heard my alarm go off again, so I've been triggered. So I'll just mirror that trade on this TradingView trade. So as price reach those equal highs, this is where I take off my final position. So overall, this trade was around 1 to 4, including a 30% partial, and price action gave us multiple opportunities to enter. So if you didn't get your first position in, you could have had multiple chances to get in. And if you're looking to put on a more aggressive trade, you would have had multiple opportunities to pyramid your position. When pyramiding, you just have to be cautious that you will be allocating more risk. So calculating your position size, once again, using a calculator or an EA is a must. And here I just show the multiple retracements for pyramiding and that final gap that I labeled as too late. And this would be known as a breakaway gap, if I'm not mistaken. Alright guys, that's pretty much it for this video. I have no idea how this is going to turn out. I think it will be an absolute mess, but we live and we learn, so it'll only get better from here. As always, if you enjoyed this video, leave a like and subscribe. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, take care everyone. Peace.